What's up, everybody? It's Stas here. Welcome back to another video. As you guys read on the title of this video, I just wanted to quickly go over how to know when to cut losses in the stock market or when to sell a position that really has not gone your way since the time that you bought those shares. So you bought the shares, you thought that the shares are going to appreciate in value, but they've gone down in value since you've bought them, right? What to do in this particular situation, when to know, when to cut losses or whether to add more shares to your position when it goes down in price. And this video is more tailored towards a short-term trader or short-term swing trader, day trader, not really towards a long-term investor, because if you're more of a long-term investor, and shares go down in price and in the short term, that may be more of a that may be more of a buying opportunity for you if you still believe in the stock or the company itself in a long-term basis. This is more for short-term day trading, swing trading, people like myself, obviously, who focuses more on the short-term movement of a stock and try to capitalize on, the short-term fluctuations of the price. So this is what we're going to be looking at in today's particular video. This is my channel right here, guys. Obviously, you guys are on it right now, but if you guys are new, make sure to come over here and subscribe. I'm at 310 subscribers right now. Our community is growing on the daily, and I'm very, very appreciative of everyone that's been subscribing and following my videos. Thank you guys so much. And also, if you're interested, follow me on Instagram, because I post all my profits from the stock market down below in the description. So if you're interested, follow me on that. But let's hop right into the topic of this video. This is the Think or Swim platform right here. This is what I use to, analyze all my stocks, and this is what I recommend to any beginner in the stock market that's asking me, hey Stas, what do you use to analyze your stocks, to find stocks, scan stocks? This is what I use, guys. Think or Swim by TD Ameritrade. Make sure to give this a shot if you're a new investor, new trader in the stock market, and let's just hop right into the topic of this video. So like I said, when should you sell a stock or an ETF when it doesn't go according to your plan? So let's use this particular ETF for an example. This is a Bear Energy ETF, ERY. So you can see that this particular stock was following, a nice little pattern right here of, short-term intraday play, short-term swing trade play, where it was topping off at about $54, bottoming off at $48. So one would look at this and be like, okay, this is a stock, this is an ETF that has a support level at $48 and a resistance level at $55. So if you were able to read this pattern, to identify those supports, those resistances, right, you would be able to see, okay, from $48 up to $55. This particular ETF has about 12 to 15% or 10 to 15% potential for profit, depending on where you buy and depending on where you sell. So as this was approaching this particular price point of $48, one would be like, okay, this looks like a good ETF to potentially look at because it's at a support level. It's looking to bounce at the support level and go back up to the resistance level. In the eyes of a trader, in the mind of a trader, this is what we think. This is what people try to look at when a stock or an ETF is approaching a support level. So since it approached the support level, let's say we bought in at about $48, thinking that it's going to bounce up above this EMA line, all that stuff that we look for an uptrend, but then it ended up breaking down below, and from $48, the support level that it was at, it ended up breaking down below that. And if you were to buy there and not cut losses, right, you would be down about 20% on your position. So how to avoid this, how to avoid these mistakes in the stock market of holding a stock that's just going to burn you, or holding a stock that is on a downtrend pattern, how to get rid of that, how to know when to cut losses. So how to avoid this, how to avoid going down 20% on any particular position that you take in the stock market, is to just have a plan and to stick to it, guys. I know that whenever you make a plan, let's say you buy at $48 and your plan is to sell at $55. Okay, you have to have a plan where to cut losses as well. So let's say it does not go your way. Let's say it's reached that $48 support level. It's fighting there, and then it starts to go down. You have to understand that you have to have a target, cut loss price for all those shares of your stock, or maybe not even all the shares of the stock. You could even cut losses on 50% of your shares, right? Let's say you want to cut losses on, let's say you have 100 shares of this particular ETF, and then it starts going down below that support level, and you still think it has potential in the next 1 or 2 weeks, but you still want to mitigate your risk and cut some losses. You can cut 50% of your stocks shares, right? You can cut 50% of your losses. This is one way that you can go about this. Let's say if you still think it has potential in the long term, right? But the thing that I personally do is if it goes down below 2 to 3% below where I personally bought, that is where I end up cutting all of my losses. Because usually with these inverse ETFs that I trade, they're very, very volatile, and I don't usually cut 50% of my losses, unless I personally see a lot of value in the particular ETF or stock that I'm personally trading, right? And that's what I recommend. Not really what I recommend because I'm not a financial advisor, but that's what I do. That's what I document on this channel. That's what I've been doing in my personal journey. And if you guys want to take notes of what I'm personally doing and do your own due diligence, that's okay. But that's one way you can do it, guys. You can cut 50% of your losses at 2 to 3% below where you bought, or you can cut about 50% or however many shares you want to sell at a loss. That's what you guys can do in this particular situation. Or, if you're at $48 and you want to avoid this particular situation of going down 20%, right? You can just cut losses and be very, very conservative, even at 1%, 2%, guys. Because the really cool thing about ETFs in the stock market, guys, is if, let's say you do go down 2 to 3% on this particular ETF and you have to cut losses, right? So let's say you put in $1,000 position on this particular ETF. You're down 2 to 3%. Okay, so you take what is that, like a $30-$40 loss? Okay, not bad. So you can take that money, right, since this one's actively trending down as it broke below that support level. So say you're here at $48, right, down 2 to 3%. So let's say you cut losses at about $47, right? This ETF is actively trending down. It broke below that support level, right? So what you can do here, guys, what really cool thing you can do here, guys, with these inverse ETFs in the stock market is that you can make your money back on the inverse to this particular ETF right here, ERY, that is trending down, because the inverse to it is going to be trending up, right? That's the really cool thing about these inverse ETFs. So this one's trending down. We would be able to hop into ERX, which is the inverse to ERY. So if we look at this chart, pretty much the chart is the exact opposite of ERY because they are inverse ETFs. And these two inverse ETFs, these are actually energy ETFs. And this one's the bull ETF, ERX, and ERY, the one I was just on, is the bear ETF. So look, exactly what I said, right? as ERX, or ERY, excuse me, broke below that support level at $48, this one broke above the resistance level at $28, and this one's been actively trending up since then, and now it's at $34. So if you were to cut losses, let's go back to ERY. Like I said, if you were to be able to cut losses at $47, right? That's only a 2%, 2.5% loss, right? And if you were to be able to enter into the inverse ETF, which is ERX, in this particular position, right? So let's say you cut losses at 2 to 3%, and you entered it into this one at about $30.50. So let's say you waited for that confirmation of an uptrend. Obviously, the other one is downtrending. The other inverse ETF is downtrending. And let's say you got into this one at $30.40, and you wrote it up to where you are now. That's 12% profit. That's 12% profit, compared to the 2 to 3% loss. That's why it's always good to, stick to your plan. Take that 2 to 3% loss if you're trading these inverse ETFs, because you'll be able to hop into the inverse to it and potentially even make more money than what you lost, right? And then you'll be able to put your money to better use than, keeping it in that actively trending down ETF of ERY in this particular example that I'm using on this channel. So that's pretty much what I usually do, guys, when I'm in a position where I want to cut losses with ETFs and stocks. This is really just for ETFs because stocks don't really have inverses like that, but inverse ETFs, this works like a charm, guys. If you're down 2 to 3% on one and it starts to actively trend down, you can cut losses and then get into the inverse and make that money back that you lost and some. That's what you guys saw in this particular example that I'm showing you guys here. And pretty much that's it, guys. I hope you guys enjoyed this particular video. If you did, make sure to leave a like, comment, and subscribe. If you want to follow me on Instagram, where I show all of my profits, where I post updates to my channel, my personal life, cars, motivation, anything like that, it's down below in the description. I would really, really appreciate it if you guys just gave me a follow. You don't even have to give me a follow. Just go check it out. And if you guys like my page, drop a follow, and I would really, really appreciate it. Hope you guys found some value in today's video. I'm going to be doing about 3 to 4 uploads per week. I'm trying to focus on more quality content instead of doing like daily uploads and stuff like that. But yeah, let's make some money today, guys. Hope everyone's out there killing what they're working on, and Peace.